Hello, everybody. Good afternoon. Welcome to a new edition of our Power Play Tuesday. My name is Andrea, and I'm an IRA specialist here at Quest. We have a great class for you guys today on a great topic. We have Joe Robert who will be speaking on cryptocurrency. So super excited about that. Joe Robert founded Robert Ventures, boasts an impressive 20-year track record with over 200 real estate transactions, 1,500 mortgages, and a diverse range of Web3 sector investments. Leveraging his exceptional skills, Joe consistently identifies emerging trends and uncovers undervalued assets, optimizing investment potentials and returns. Joe, as a dedicated manager, has cultivated a thriving business centered on alternative assets investing and the ever-evolving digital asset landscape. So without further ado, let's bring him up so that he can start his presentation. Welcome, Joe.
Welcome. Thank you, Andrea, for having me.
Take it away.
Alrighty. So let's get rolling, everybody. Thank you for joining us today. We're going to hit on cryptocurrencies, the market cycles, and investing in the next trends. Your typical disclaimer we start with: presentations are intended for educational purposes only and do not replace independent professional judgment. It may not actually reflect today's facts. Statements of facts and opinions expressed are those of the presenters individually and not that of the trust custodian or Robert Ventures. Also, this will be obviously recorded. Video and audio may be published in various media outlets, and information provided should be construed as investment advice. And any questions you have, I'll be glad to answer them at the end. So a little bit about myself. My name is Joe Robert. I am, again, the founder and manager here at Robert Ventures. And, as Andrea mentioned, some of my career highlights include, mostly over the last decade, managing multiple real estate partnerships and over 200 properties and 1,500 mortgages. But also along the way, I went from living in the Philadelphia area down to Puerto Rico in 2014. And while residing in Puerto Rico, I met people in the digital asset space, or known as the crypto space. And so in 2017, I had the experience of being able to start investing in that space. And so now it's coming on pretty much 6 years, believe it or not, as time does pass very fast. And, we're still in the space, and we're more excited today than we were 6 years ago as we see some of the stuff through the slides that's going to demonstrate how well and how much this space is maturing. Over the last few years, also a partner and myself have allocated capital into other notable venture funds in the space. This gives us investment exposure to other sectors that we're not focused on. Example might be like gaming or DeFi. There's other funds that have a specialty in acquiring these startup projects within their portfolio. And so we have allocations to those funds also, along with our own digital asset portfolio. And in the last 6 years, we have allocated to multiple blockchain investments, startups, more so back in 2018 and less so today. So understanding and operating in cycles. One of the biggest things I've learned in the last 20 years of my investing career, and I think people will learn over time as they age, is that a lot of sectors all happen in certain cycles. And so they tend to be cyclical, and the smarter the investors are, or the older and wiser typically, because they've already made their mistakes, learn how to navigate these cycles and make the most of these periods. There's always typically an accumulation period, and then a markup, or when the price goes up, and then a blow off top, and then usually the price comes back down into accumulation zone again. So to kind of correlate a little bit of the crypto, but with also real estate, is that there's been a theory out there that real estate runs on approximately 18-year cycle. It's not exactly follows all the time, but you get an idea based on the chart here. You can see these different cycles where from the left here, you have the recovery phase, and then you have the expansion phase, and then you have the hyper supply phase. So typically, it's best to accumulate in these early recovery phases and then allow the market to do its thing, and then liquidate or sell some of your assets towards the top of the market, and then allow for the market to hit the recession phase and have those prices come back down. So the crypto over the last decade or so, Bitcoin has kind of run a similar thing in about a 4-year cycle. And, as you can see here on the chart, here we have the accumulation phase, we have a markup phase, and then we have the distribution phase. Again, accumulation phase, markup, and then we have the markdown. And it goes on. And right now, I would say my take is that we're actually in another accumulation phase where the smarter investors are accumulating the certain assets they would like to hold over the next 2 to 3 to 4 years, and they ultimately should be rewarded the best. And this is typically the best time to participate in any cycle. And if you think back to real estate, if you would have been a participant back in 2010, 2012, 2014, and held it for the last decade, you would have had a lot of upside. Now, where prices are at, they seem very high, less rewarding, and a lot higher risk. And so this is a great time to enter the market. And as this cycle demonstrates, so coincides with some other things that we're about to show. BT Bitcoin price versus liquidity in the market. So a lot of assets, including real estate, but Bitcoin, also tends to flow with liquidity in the market, right? So as you can see, the M2 and the money supply, the more the money supply is in the market, the more the price rises. As the money supply comes out, price seems to come down too. Similar, it comes up and goes down. So right now we're at this point where we have that down point, but it is projected in the next 12 to 24 months that, again, liquidity will come back into the market, and that should prompt the price of Bitcoin and probably other assets to start rising again. So bear markets are for opportunities. And why is that? The opportunity for bargains. These are prices that 2 years ago, everyone wished they could have bought at. And then, what happens is the bear market hits and investors tend to think, oh, it'll keep going lower and lower and lower. You don't really ever know exactly where the bottom of the price is. And you also don't know where the top of the market is. But right now is a great opportunity for bargain hunting and looking for those projects that you want to invest in. Number 2, long-term vision. Focus on the long-term potential over the short-term volatility. A lot of time when you're buying assets that are traded daily or have a high liquidity, you tend to focus too much on the short-term moves, like 10, 15% moves in the market. The goal here is to make a business plan where your investment horizon is a longer period, whether that's 1 year, 3 years, 5 years, or 10 years, and then stick to that and don't allow the short-term moves to shake you out of the market. 3, reduce competition. There's a lot fewer active buyers in the market, and that means you have the advantage to be able to buy these valuable assets at a bigger discount. The more participants that move out of the market signals that you're typically closer to the bottom of the market, and therefore it's a great time to be accumulating again. Reinvestment period. With a lot of these tokens, there is a possibility of you being able to stake those tokens for rewards and then use those dividend and interest to reinvest and increase your token allocation. Strategic entry. We try to write out a plan of where we like to enter on certain projects and price points. And during the bear market, you want to sit down and you want to set the stage for what are the price points that you want to buy at, and what are also some of the price points you may want to sell at in the future, and write your thesis on why you would be a seller in that market. And therefore you stick to that business plan, because a lot of times when the market goes up, it goes up 5x, and then you tend to say, okay, I just think it's going to go up at least another 1x, and then you don't sell. And so you end up riding the wave way back down. So it's great to have that strategic entry, but also exit when you want to exit and why you'd want to exit written down as a business plan. Emotional discipline. Probably one of the biggest factors that we all got to deal with as investors. Successful investors can maintain their composure and also avoid panic-driven decisions. Especially in crypto, where the price can be volatile and changed daily by multiple percent. Managing your emotions is the biggest key to success. And that kind of comes back to creating that business plan of where you want to enter the market and where you may want to exit, and try to minimize those emotions. That's why they say, sometimes code or bots can actually trade better than humans because they don't have the emotion. It's already programmed in. So you want to think about that within your business plan. So when it comes to due diligence and projects, what are some things that we look at personally? Number one, we like to look at the team. This is like investing in anything or any syndication, any startup, any token project. You always want to look at the team. You want to look at the track record of the person in charge. You want to see their success. Have they built similar projects in the past? Have they had exit events? Do they have authority and in that background? Can they communicate well with others and also, other crypto holders? 2, on-chain. We like to study the tokenomics and perform modeling based on on-chain data. And what does this tell us sometimes? This tells us who the holders of the tokens are, how distributed those tokens are to different holders. You can tell how many people may own the token. So there could be 1,000 token holders and maybe only 10 own 30% of that supply. So that could be a high risk. You may want to see what VCs own, what percent of tokens. And you may also want to look at token unlocks in the process. And this will give you indication with how many tokens will be released on the market in the next few years. So you could gauge how much the market can absorb and if there's risk to inflation. Fundamentals, we like to study the project's objective, its traction and user base, explore the roadmap and future goals. When it comes to the roadmap, almost every project has a roadmap that's listed on their website, usually in a white paper or light paper type form. And this will give you an idea of what they're trying to accomplish. And depending on maybe what sector you're looking to invest in, you want to read that white paper and you want to gauge if you think that roadmap is even achievable. A lot of projects, they come up with goals that might not even be able to be hit, or they may be projects that you don't believe are actually a fit for this sector. And so you want to do your own due diligence there, look at the roadmap and kind of make a determination for yourself if what they're trying to achieve is something that you want to be a part of and invest in. Next, we go into the community. Web3 is very big on community. That's what it's all about. And so, our understanding, for us, we want to examine and forecast community size and its engagement levels. And so we look to areas like Discord, we looked at Twitter, and we look at how many followers they have. We try to extract their bots, and we look to see what the engagement is within the Discord. What are the conversation or keywords that are being used? Maybe a group is talking more about pumping the price and one group is talking about building the project. You want to have that understanding of what that community is really about. And if that community is strong and willing to stick with that project over the years and see it build out. Last, we like to look at the funding, as mentioned. We want to check that early stage funding that project received and what tokens will be released in the next few years to those investors, and analyze how long they're locked up for and what impact that may have on the market. Another important step we go through is understanding what's happening from the developer activity. So Electric Capital puts out an annual report that shows you per project of the ones they're analyzing. Usually it's the top projects, how many active developers are currently working on that project. And that gives you an indication of over the years, how many are moving to what project, and also how well that project is doing. We want to look at how much that developers are committing to the code and how often. And one of the big things is, looking at the project's treasury, is we want to understand how much they have available to pay off those developers, and what their runway is the next few years. We want to be able to track the best talent. Typically, the projects that attract the best talent end up doing better over the long term. Again, through social media, we mentioned the Twitter and Discord and the community sentiment. Other ways may be to measure web traffic or Google searches for certain projects. And then, communication is definitely one of the most important things. And so how frequent is that project updating their community and their token holders, whether that be through the Discord, Twitter, or sometimes they carry a blog on Medium. So the state of the crypto market, what's happening. So I thought this was very interesting. The news always likes to drive its own narrative, and the media companies. So as we look here, skepticism in the past and kind of where this market was and where it's going. So these articles here on the right are kind of some headlines from 2018 to 2020. As you can see here in the top right, BlackRock won't offer a cryptocurrency ETF until the industry is legitimate, says the CEO. And then we have Bitcoin passes 11,000, but Vanguard CEO Jack Bogle says avoid it like the plague. And then we have the former CEO of PayPal calls Bitcoin a scam, and so on. So, these are just some, and I'm sure there's a lot more articles out there. These are all coming from billionaires, large institutions, and so forth. And this kind of gives you an idea of where we were at a few years ago and now, where we're at today. So investing in the present. So now BlackRock filed for a spot Bitcoin ETF. So as you've seen in the last slide here, they said that they won't offer until the industry is legitimate. So what Larry Fink is saying, and has come out publicly, is that the interest levels of all of his clients has been very high. The searches and demand for the product are there, and that they have finally decided to file a Bitcoin spot ETF. Not only BlackRock, but Fidelity and many other large institutions keep coming out and filing it for a Bitcoin ETF. Also, Vanguard owns approximately 560 million worth of Bitcoin mining stocks. Vanguard, companies like BlackRock, Vanguard, I think Bank of America are holders of MicroStrategy, and MicroStrategy is basically a Bitcoin play. It's a public company that owns primarily all Bitcoin on their balance sheet right now until an ETF is approved. And also PayPal recently announced that they are creating their own stablecoin. Tesla still maintains Bitcoin on its balance sheet, and Microsoft announced they are building a crypto wallet inside its Edge browser. And these are just a few of them. You could comb the job boards across the internet, and you can see that a lot of the companies, or Amazon and a lot of larger companies and gaming studios, in some aspect have some type of postings out there for the Web3 sector because they understand what's going to play out in the next decade. And a lot of this, development from these larger companies do take a few years. Some of the stuff might not be till 2025, 2026, but you should be able to get an understanding that the sector itself is maturing and that things do take time to play out, especially in the technology sector. The sector is more than just crypto. Also, I always like to say it's not always just about tokens. It's about data ownership, decentralization, and the evolution of the web, which I like to say is the evolution of software. The sector is creating software to provide these benefits for the people and be able to handle transactions trustless. So some, simple terms here: blockchain is a distributed database, infrastructure layer in which applications are built upon. In general, this technology is decentralized and leverages multiple nodes to eliminate a single point of failure. So what does that mean at its basics? That, there's many computers across the whole world that have a copy of the Bitcoin blockchain. And so if one computer goes down, it's still up and running, and that these nodes are across the world. And this minimizes any failure to the blockchain. Some basic token purposes, code, token purposes, code represents different assets. And also we have revenue share like a dividend. So there's projects that sell tokens, and what they do is a rev share back, could be 3 to 5 or 8% a year. And so if you own those tokens, you're entitled to that revenue, just like a dividend in a stock or so. Some of the tokens on the blockchain networks, I like to maybe say it's like similar to a gas you might put in the car, where you need gas in the car in order to go down the highway. So same on the network, you need to own that native token in order to do a transaction to pay for that transaction fee. Also, a lot of these tokens may represent ownership and certain digital assets like NFTs, participation in the network. Some like a DAO owning those tokens allow you certain voting rights or certain member participation. It just depends on how that token is set up. And probably one of the biggest use cases is definitely currencies and payments, especially cross-border globally. And last, we have Bitcoin, the digital gold. There's a finite supply of 21 million. It runs on the largest distributed immutable global ledger. It becomes harder to mine over time. As we mentioned, every 4 years, we had the Bitcoin halving, and that reduces the supply, and that usually gives us a boost into the market, and that's to occur next spring. And it's also known as the best store of value in the sector. So here was an earlier study back some years ago, but just a hypothetical, and this usually has done well over the last decade, that if you compare the 60% equities and the 40% bonds, but you add in a 2% or a 5% or a 10% allocation of crypto, you outperform your standard 60-40. Now, for those that don't feel as compelled to the riskiness of crypto, maybe some people like to say they just start out at 1%, but you can get an idea that that will impact your portfolio and should help those returns over a period of time. Some other benefits we have is Bitcoin's, globally accepted. It can be easily converted into various currencies, making it a highly liquid asset. So that gives us the ability to be able to send it borderlessly to anywhere in the world for fractions of pennies. And that is one of the best things that we like about it. Also allows us to hedge against inflation when the central banks around the world are printing money, as we looked at the M2 chart before. So Bitcoin is the apex property. This is Michael Saylor. He's been a guy in the space who's been known over the last few years to be a person that speaks up a lot about Bitcoin. He is the CEO of MicroStrategy. They got a few $1 billion worth of Bitcoin on their balance sheet they've accumulated in just the last few years. It is the way for people to get exposure to Bitcoin through a stock account right now. And as mentioned, some of the players like Vanguard, BlackRock, and I believe Bank of America and so forth own stock in this guy's company. So here's some of the things that he's mentioned and why he's acquired a few $1 billion is that Bitcoin is technology that gives you back a right to your own personal sovereignty and your own property. And, for a lot of us in the US, we're used to having great property rights, but those across the world may not have similar property rights where governments have gone in and taken the property. Over the last few years, we've definitely seen some things with like the Canadian truck drivers for a moment, or over in Russia and so forth. And so what Bitcoin does, it gives you that power back. When you put your money into Bitcoin, there is no property tax. So he's saying, kind of comparing it to real estate. If you buy a piece of property, you're still responsible for those real estate taxes and so forth continuously. With Bitcoin, there is no property tax. And with Bitcoin, you can loan it to anybody in the world. Any bank might even also give you a loan against it at a certain interest rate, and you could generate rent on it anywhere in the world. And in any day, you could sell it because there's liquidity in the market. And so that's like one of the best benefits, if you kind of compare it to real estate. I mean, the liquidity, no maintenance, you self-custody it, and you kind of sit on it. So when it comes to the borderless payments, the need for smart contracts is if, we want to be able to do a transaction, let's say myself with somebody over in South Africa, and we don't want to use a third-party intermediary like a bank or somebody else. Smart contracts allow us to handle these and facilitate these transactions all based on code, so we can execute those trustless-like transactions with people across the globe. And that's really, the big benefit if you understand financial instruments and settlement on these assets. And this gives us, back the digital property rights. So I think that also speed and cost of blockchains are becoming faster and cheaper than traditional banking systems, especially on the cross-border transactions where typically you send a wire from a bank, you have that international wire fee, and that may be, depending on your bank, 1 to 5 days, where you can send a transaction here and it's there typically within minutes. So NFTs and ownership, there's been a lot of conversation with NFTs the last few years, especially with the last bull cycle, with all the different artwork and everything that has come about. But NFTs represent true digital ownership, allowing creators to monetize their work in ways that weren't possible before. So we saw a lot of creators and artists that were creating artwork, and then they would sell that NFT, and that NFT would represent the rights to that artwork. Next, we also have the blockchain ensures that the authenticity and provenance of those assets make forgery nearly impossible. So, a lot of assets before, or a piece of artwork, they may not come with a title, or maybe a piece of paper that could be forged easily. With NFTs, this gives us a way to validate that ownership and makes it almost impossible to forge because it's a unique one single token that represents one single asset. Another thing that we see over the next few years is integration with TradFi. So NFT platforms are now going to collaborate with financial institutions. So you'll be able to get loans against these NFTs. And, this can almost apply to any digital asset. And I think as the space evolves, we're going to see more, real life assets also become collateralized by these NFTs as they learn how they can value those assets that are not on chain. But to start, at least assets held on chain, whether that's that artwork, certain tokens, or maybe titles to certain assets, you'll be able to have the ability to get a loan from other TradFi-like companies or other peer-to-peer investors online in a matter of minutes. NFTs are a great way to be able to legally and legitimately transfer ownership of assets. And ownership of assets will always be on record. The NFT is basically a digital certificate of authenticity of that item, I like to say. So if you think of your car title, they put the VIN number on there, and then, on your car, and then on title, they have a title number. And so what an NFT does, it gives you a string of numbers, and that represents that automobile or that asset on chain, basically. The data can't be changed because the record is managed by thousands of different computers. So you don't have the fraud as a centralized typical computer, let's say, down your DMV. I mean, the local guy working there could really go in there and change up the records if he wanted to. So innovations and trends. I like to put this in perspective, even for myself, but everybody obviously on the call. Because I think, we always get caught up in the short-term thinking when we're investing, and we don't always understand how the biggest things in life, how long they actually do take to play out. So I like to say we're probably only about a decade into the crypto market. And if we look at Netflix here, that was founded in 1997. We look at Amazon, 1994, so we're almost going on 30 years. And Apple's 1976. And Facebook's 2004. So we're almost at 20 years. So if we kind of look at these companies that are hundreds of billions or $1 trillion, how big they are today, they took at least 20 years to, get to this size. But also in hindsight, everyone's always like, wow, if I would have just bought into one of these companies 10 or 20 years ago, I would have done real well. But then at that point, after the Amazon came out of the dot-com crash, no one wanted to buy that stock, right? And so I think there's similarities in the crypto sector right now. And, we're a decade in, and I think the next 10 to 20 years will be the biggest growth we see in the sector to start getting valuations like we see in these companies that are 20, 30, 40 years old. And having that type of mindset as an investor is very important and key. And that's why I said you want to always write out your thesis on why you make an investment into something, so you don't allow the price change or the volatility to sway your decision and moving forward, because you don't want to be kicked out of your position or instantly sell and not remain intact for 10 or 20 years if your thesis is a certain thing that, hey, I want to be in here for 10 or 20 years. So I think this is always a great slide to look at. I hope you got some value there. As we kind of see similar to that transformation, on the left, we got the Bitcoin market. This was in 2011, initially allowing people to buy their first Bitcoin. And now we're at 2023, like I said, about a decade later. And almost every mobile device, you could download apps and you could buy a lot of different tokens. And the market cap has dramatically gone from 23 million up to 500 billion. So you can see what one decade has done. So definitely I'm interested to see what the next decade does. Last, we all have a IRA account, hopefully on the call here with Quest. And, some ways that I found that you can invest in this sector is, one way is you can set up a IRA LLC. That'll give you the ability to invest in funds directly, startups, or set up a exchange account. And another way to invest with your IRA without an LLC and just with your Quest account directly is to be able to invest in different private placements and private stock of the companies. Or you could invest directly into crypto through your IRA account through ErisX. As the IRS has mentioned, the IRS treats cryptocurrency as property for federal tax purposes. Therefore, general tax principles that are applicable to property transactions must be applied to crypto transactions. So for the most part, when we're dealing with buying and selling of cryptocurrency within our IRA accounts, you're going to generate capital gains treatment, and then that's going to be tax-free. So, I like to say it's still time to accumulate as we're in that accumulation phase in the market. We may see it a few more months. We may say up to 12 months. It kind of just depends on what's happening. But I think, the best thing to do is to take some action, do your due diligence, write down your plan, and kind of, dollar cost average into what projects you think are the best, and allow your thesis to play out over the next few years or next decade. Plus, you also have the tax benefits of that capital gain income. On a weekly basis, we put out a digital asset newsletter for anybody who would like to just join that at joerobert.com. And anything else you guys would like to know about what we're doing or what we're investing in, you get that information from our website at robertventures.com. And now I think we're going to open up the floor to Andrea or questions.
Can you guys hear me? Oh, I'm so sorry. I was stalking this whole time. Sorry about that. I was saying thank you, Joe. That was amazing, and it's always refreshing to see what new market trends and what's going on. And I always like to see it anyway. Thank you, guys. But you can hear me now, right? Yes. I was saying also that we did see some questions coming in already for Joe. But before we get to that, I want to give you some updates, guys, and share them with you. Of course, always a disclaimer. Quest Trust Company does not provide any tax, legal, or investment or structuring advice. And all this is for educational purposes only. All material shared here today. If you need to consult with a CPA or attorney, accountants, please do so before entering into any type of deal, okay? Now, if you're wondering if you really want to get into it, and as Joe was mentioning, you maybe want to incorporate crypto into your portfolio, you can do so with your IRA. So please scan this code, schedule an appointment with us, with an IRA specialist, and we'll take you through the process. We'll explain everything to you so that you can get going on that. Or similarly, if you want to invest in any company that is around Bitcoin and invest around them, get with us, scan this QR code, and we'll get you all set up. I want to touch on and let you guys know about our Gold Family experience. It's for you can have multiple accounts up to 10 and including accounts for your direct family members. This is for the same fee. You're going to get a concierge service, more like a one-on-one and personalized treatment. It's really great. They also have private events, and you just have extra features that you don't really get to have whenever you are part of our regular fee schedule there. So make sure to check it out. Our next social event in the city of Houston, in our office here, and in Austin and in Dallas, so meaning in-person events, are going to be hosted in November. So make sure you attend, click or QR code here for you guys so that you can register for them. They're going to be really big. I don't know if you guys attended our last one, but it was huge and we had a great time. That one, we had about 200 people join us in our Houston office. This time we're expecting even more. So yes, make sure to sign up for that. We're going to have a great panel. They're going to be discussing the rental continuum, decoding short-term, midterm, and long-term rental. So it's going to be really interesting topics. And again, great opportunity to network. Okay, QuestCon Live is going to be free this year. It's going to be centered, and we're going to have great panelists, women panelists. So we're super excited about it. Some of the industry leaders, female investors. So great chance to also ask them good questions and join us there. Again, it's going to be completely free and online on November 17th. So make sure you register for that too. And finally, our Quest Expo, we're going to have it in June 2024. So June 27th, 2024. It's going to be in the Dallas area. It's going to be amazing too. So if you want early bird tickets, go ahead and scan this QR code or get to with one of us and we'll get you all set up there. So let's actually go ahead and bring Joe back so that we can get on these questions. Thank you, Joe.
All right. So should we drop into the comments here and answer a few of these?
I'm going to put them on the screen.
All right.
Can you read the screen? Can you see it?
Yeah. I think.
Okay.
Yeah. So did the altcoins follow the same trend? That's a good question. Let's see. The altcoins followed the same trend. Yes, I would say yes. If you're talking about the trend like Bitcoin and the market overall, yes. I mean, Bitcoin is definitely the leader in the sector, and so typically the altcoins follow Bitcoin. I would say during periods of low liquidity or accumulation phase, like we're seeing right now in the market, where the market's dramatically down, your altcoins are going to have a lot less liquidity, meaning there's a lot less buyers and sellers. And so those prices will tend to sell off more than Bitcoin on a percentage basis. So you'll hear the saying that people want to be in Bitcoin more in a bear market. And when the market going up, a lot of people like to trade the altcoins and then go back into Bitcoin.
Awesome.
So the Cosmos ecosystem, good question. I don't follow the Cosmos ecosystem all that much as I follow probably Ethereum and Solana. It seems like it's been on a little bit of a roller coaster ride the last 5 years. Sometimes it's doing well, and then sometimes it's not getting as much traction. Not my favorite as of now.
Awesome. Let me read the next question out loud. Should the crypto investment strategy be tied to specific crypto projects?
I would say Christmas, these tied to specific crypto projects, huh? So I would say that I'm not sure exactly the question, if you want to also comment back in there, but when we're creating our strategy, I would say it's definitely related to the crypto projects because every project is, what you're investing in that token. So in creating that strategy is definitely tied to a specific crypto project.
Okay, thank you. We have from Sandra Ferrari, what's the minimum amount for one to start investing?
Well, I mean, depending on which way you're investing. If you're investing in, let's break down a handful of them. If you're going directly to a exchange, you can start with $100, or your a minimum account. You can start investing there. If you're looking to seek out funds in the marketplace, all funds have different minimums, similar to real estate. Some might have a 25, 50, or 100K minimum, and you got to kind of look at that operator's paperwork and see what they're offering. I think also with Eris X, I don't think there's a minimum. Is there?
You're right. I was gonna say that there's no minimum. And by the way, it's formerly known as Eris X. Now it's called SIBO Digital because they got bought out by SIBO. Yeah. So that's the new platform, or at least the name they merged. Yeah. So, and yes, you're right. I don't believe there's a minimum to invest with them. So you can, even with $100 with your self-directed IRA, you can invest with them. Mm-hmm.
Yeah, so SIBO platform allows you a handful or plus of tokens. I think they're adding periodically. So if you want to easily get into the game, get into the market, that's going to be your quickest and easiest path, as long as the tokens you're looking for exist on that platform. The much harder route is obviously going to be something like through an IRA, LLC, or something like that. But for the basics and for the best top tokens like Ethereum, Bitcoin, and so forth, you could go through that SIBO platform.
Correct. Awesome. And then we have this one from TIG 5201, example being the purpose of the project. I think this ties into his question before. Should the crypto investment strategy be tied to specific crypto projects? I don't know if that makes sense.
I don't know, it's still a little off, but let's say, I think this goes back to understanding maybe the fundamentals of the project and doing your due diligence. A lot of the tokens, depending on your opinion, a lot of tokens or projects may not even necessarily need a token. A lot of projects might not necessarily need a token, or the purpose of the project may not even make sense in this market, and they may just be doing that. That may be their own creative idea, but you may not think it's a fit. So I think analyzing those projects and understanding what the purpose is part of you creating your investment thesis. So in creating investment thesis, like everything, if we relate back to real estate, some people are like, I'm only going to invest in multifamily. I'm only going to invest in industrial. Well, similar in the crypto market or in the stock market, you might say, okay, I'm most interested in the gaming sector, and here's my thesis on why I think these games would do good with a token. And then once you generate that thesis, then you're going to want to go and kind of filter through projects and see what matches, and then match that up with, hey, is the team behind this project able to execute kind of on the vision? And the way technology kind of works is, and I mean, even on the tech stocks, it's kind of like forward thinking, right? So people start betting on it prior to when things actually occur. So if next year the growth is projected to be X%, people start betting on that today. So a lot of times what you're seeing in this market is an idea might be very good, or they hit certain milestones, and then their future goals look really good. So they're pricing that in. So the price goes up a lot, but then once the goals hit, the price actually comes back down. So you got to kind of just become familiar with that and understand what that outlook looks like over the next 12 to 24 months.
Awesome. Thank you for answering. And if anybody else would like to ask Joe or myself a question, go ahead and put it in the chat. Now is the time. We'll give you a couple more minutes there before we close off here. Let's see if anybody else has a question. Oh, here. In your opinion, when do you anticipate the next crypto bull market?
Everyone wants to know when they're going to get rich. That is always the question. You can't predict the future. That's all I could say. I would say that how we're looking at it ourselves, I'll just tell you what we're looking at. We definitely think that somewhere in the next 3 to 12 months will kind of mark the end of the accumulation phase. And at that point is when we kind of anticipate the next crypto bull market. And a few things that can play in here is kind of the macroeconomy. What happens in the next 6 months? Do we see a recession, not see a recession? What is the stock market doing? There is some correlation, right? If everyone's stock market starts selling off a lot, then that liquidity leaves the market, less into crypto. And so therefore that price will stay flat again for a little longer. We also want to see when the Fed decides that they're done officially and announce that they're not going to cut rates anymore, or maybe there's a sign of a pivot, and that's going to give more reason for the market to start buying again. And ultimately, back to the M2 money supply is when the Fed may need to step back in and, start shoring up and providing money back to the economy over the next 12 months or so. So long story, I anticipate to probably happen, 20 more on 25, 26.
Awesome. All right. Well, that brings us to the end. I don't think there's any other questions, except for a couple that we've answered in the chat. Just so everybody knows, this webinar is being recorded and it's going to be posted on our YouTube channel or our Facebook channel. So if you didn't get a chance to catch the whole thing, you can catch a replay there. One last one. Sorry. I currently am using Coinbase, to which I'm not a fan of their fees. You have a recommended platform?
I know. Well, when a sector is early, early in the game, they typically have the highest fees until a lot of different competitors come into the game over the next decade. I'm sure we'll see the fees come down. Coinbase fees have been pretty high. I'm not a fan of it neither. I think it's almost like 1% or so to trade. And, I've used Kraken. They seem to be cheaper, and they've worked efficiently. They've been in business at, they haven't had any problems as of up to today. So Kraken, I'm a fan of personally. Not awesome. A paid endorsement either.
Good to know. Good to know. Well, thank you everybody who's joined us today, who's participated. And of course, thank you so much, Robert, for being here talking to us today. Hopefully we will have you again in the near future.
Thank you very much. Thank you everybody for joining.
Thanks everybody. Have a great rest of your day.